These are the only trades you need to know about today, starting with number 10, Lionsgate Entertainment. We are keeping our eyes on shares of the entertainment company ahead of its third quarter earnings due after the close. Analysts estimating the company earned 21 cents per share, 50% lower than the last quarter. Dom?
Well, number 9 is Manchester United. Investors are rooting for the publicly traded British soccer team in the pre-market this morning, driving shares higher after a Jefferies note said that it estimates strong second quarter results when the team reports earnings later on this week. Sarah.
Number 8 is Novo Nordisk. The pharmaceutical company is seeing its biggest drop in more than a decade right now after the FDA, the U.S. government, rejected the company's new insulin, demanding a new study to assess heart risk from the drug, which the company will unlikely be able to complete this year or next. Betty.
And number 7 is Tesla. You know the company by Elon Musk. Shares of the electric car maker taking a hit ahead of the bell this morning after its new Model S sedan stalled out when being tested by a New York Times reporter who also experienced problems with the car's software. Not good in terms of a demo for Tesla. Alix?
I'm looking at number 6 is Nike. The athletic retailer now has an overweight call from J.P. Morgan after a visit to the company's headquarters boosted the firm's confidence that Nike could effectively balance long-term investments and short-term profitability. Sarah.
Number 5 is AOL, the internet company, now an outperform at RBC Capital, getting an upgrade after better than estimated fourth quarter numbers, increased market share, and overall an improving revenue growth outlook.
And at number 4 is Google. We mentioned this story earlier. Chairman Eric Schmidt is adopting a plan to sell up to 3.2 million shares valued at about $2.5 billion. Google is calling Schmidt's plan to divest over 40% of its holdings in the company, quote, routine diversification. Dom?
Well, number 3 is Wendy's. Shares of the fast food company with over 6,500 restaurants around the world could rise as much as 40%. That's according to a Barron's report as the burger chain refreshes its menu, boosts earnings, and remodels stores with Wi-Fi access and flat screen TVs. Alix.
Number 2 is BlackBerry. Shares of the Canadian phone maker in the red ahead of the opening bell this morning, cutting into the stock's 40% climb in the past month. And the downwards pressure comes after Topeka Capital published a note saying Apple will likely release a new, cheaper iPhone this year. Competition, Betty.
And at number 1 is US Airways. The airline that carries about 80 million passengers yearly is finalizing details on a merger with American Airlines, which both companies' boards may vote on later this week. A successful merger would form the world's largest carrier.